So joining me today, I'm very pleased to welcome Mark Jarvis, CEO of Gigametals Corporation, to our CEO Spotlight segment. And they run the Turnagain large low-grade nickel sulfide deposit in north central British Columbia. Mark, welcome to the podcast.
Well, thanks, Adrian. It's great to be here.
It's great to have you. And low-grade nickel deposits are one of my areas of interest, you might be surprised to hear. So tell us what you're working on. What are you up to and what you guys are doing at Gigametals?
Well, we're currently on the property doing resource drilling, and we're trying to gather the information we need to advance the engineering from a PEA, which we released earlier this year, to the pre-feasibility level, and sort of sandpaper the economics and figure out the optimal processing route and how we can wring the most economics out of this deposit. So but it takes a lot of data to back up the more detailed level of engineering. So that's what we're doing. And just in general, we're trying to position our deposit for development, which is a challenge. These large, low-grade sulfide nickel deposits, open pitable deposits, there's a few of them in the world, and generally the economics are poor at the lower end of the nickel price range. And so really the known deposits, there's probably between the sulfide deposits and the laterite deposits that are suitable for battery metal, there may be 15 or 20 of them in the world that have the size that we have. That I'm talking about deposits in the range of 35,000 tons a year of nickel. Okay, and you look at the electric vehicle revolution, and you look at how much nickel is going to be needed for all those batteries, and you go, well, these projects are going to have to be developed. However, the nickel price has to move higher before any of these deposits will be built into mines by Western companies. Chinese companies, SOEs, they're building uneconomic nickel deposits now, and they're building them in jurisdictions where you don't have the kind of high environmental standards that we have in Canada, where you can get things done quickly, even though they're uneconomic in Western terms. Maybe they're building projects with an internal rate of return of 1%, 2%, 3%, which a Western company would never build. Their cost of capital is cheap, and they're thinking strategically in the sense that they want to dominate the electric vehicle market, and they want to dominate the battery market, and they already do. And it looks like they secured the supply chain where they will be able to dominate those markets for a long time to come. The Western battery companies, in particular, are just starting to wake up, it seems to me. They're realizing that if they want a long-term supply of nickel at a price they can predict, at a steady price, they're going to have to own a piece of a mine. And that's where we're positioning ourselves. And we're having a lot of conversations right now with strategics. We're very interested in getting an end user in, either an electric vehicle manufacturer, and believe it or not, they're talking to us. You would think that, looking at the mining business is way outside of the comfort zone of a car manufacturer. And, that's what I think too. However, they're starting to realize that they've got a problem if they're going to compete with China. And the battery companies, of course, and of course, the trading companies and so forth, everybody can see what's coming. And so that's our problem, is that we're a small company. And you've heard this story before. You've got a very small company with an extremely large deposit. And when I say large, Turnagain, in the PEA, we modeled building a nameplate capacity of 37,000 tons per year of nickel in a very high grade, clean concentrate with a 37-year mine life. I mean, that's really, really big. So, but developing it is expensive. Just all the drilling you have to do, all the metallurgy you have to do, the geometallurgy, the engineering, every step of it costs money. And then ultimately, when you build this, we're talking about a project that we modeled a capex, an initial capex of 1.4 billion US, which will take care of a lot of our infrastructure issues. And then we model doubling our production for another $500 million US. So a total of 1.9 billion US to reach nameplate capacity. That's a big spend for a tiny company. So really, the problem is that we have to find strategic investors to invest at the project level, and that's entirely our focus.
That is so interesting, because that is what I heard from the other low-grade nickel companies I've spoken to. It seems to be all about trying to secure investment, whereas China could not care less if this thing is profitable or not, and it just wants to get the metal out of the ground because it understands the strategic importance of having that metal available. Is that how you see things?
Yes, it is. And China, frankly, isn't comfortable in a jurisdiction like Canada, where you've got environmental assessment processes that last, 2, 3, 4 years, and it's quite a rigorous environmental assessment process. So, they're interested in jurisdictions where you can get things done quickly, like Papua New Guinea, like Indonesia, and their jurisdictions close to home where they can project their naval power. So, I mean, it's a very interesting geopolitical question. And I heard you talking to Anthony Milowski about that the solution is that governments in the West have to step in if they're going to secure those supply chains. And the fact is, the politicians will talk and talk and talk about it, but they're not going to do anything. And I agree with his assessment of that. They're not going to do anything. So what is the answer? How do you get these large Western deposits developed? And I think it comes down to the supply chain again, and the recognition by battery companies, Western battery companies and Western EV companies, that if they don't do something to secure a supply chain and invest in projects where they can have a secure long-term supply at the cost of production by owning a piece of a mine, if they don't do that, the Chinese are going to eat them alive.
And is that because they won't have the nickel that they need in order to build these EVs?
They'll have to buy it from China.
Right. And maybe China doesn't even want to sell it to them, for all they know. Yeah. And why would they? Why would they sell the nickel, right?
Yeah, they would rather sell them batteries or cars.
Right. And they probably need the nickel themselves, right? So they want to sell the car, as Anthony Milowski pointed out. They don't want to sell you the nickel for the car. So very interesting. Now, we're running short on time here, but tell me briefly, if you can, so what is your ideal scenario? Because you come from a point of expertise here as the CEO of Gigametals, a nickel company. So what would you like to see happen to fast track all this? Is it quicker environmental reviews, more investment? Does that mean government investment? More, I don't know, is it more like where there's just encouragement somehow, where you make it easier for investors? Like, briefly, if you can, like, what needs to happen?
I would love it if the government were to invest, and I would love it if we could have more clarity on how long environmental assessments take and so forth. However, I don't expect any of that. Okay, so what I really am looking for is a strategic investor that'll get involved with us at the project level and will come in with an investment that'll help carry us to shovel-ready status. And that's going to be the transformative event that will cause, a huge re-rating in our market capitalization and in our ability to raise other money as well. And to that end, we've built a team here that has a lot of expertise in that area. So I'm the CEO, but our president is a fellow named Martin Vidra, who had a career at Sherritt International, a Canadian company that's a producer of nickel and cobalt. They've got a laterite, HPAL project in Cuba. So they produce and sell nickel and cobalt to end users. And Martin, in his career there, he's an engineer, but he also spent a good part of his career selling nickel and cobalt products to end users. So he's very much in tune with the market. He knows what these end users want. We've also got a fellow named Bob Morris on our board. He joined our board about a week after retiring from Vale. And at Vale, that's the big, Brazilian iron ore producer. It's also the largest single company producer of nickel in the world. And Bob was in charge of worldwide sales for base metals for Vale, copper, nickel, cobalt, and precious metals, a portfolio between 5 and 8 billion a year, depending on, commodity prices. And, what both of those guys see is a project here that can meet the needs of EV makers and battery makers, and that can do it in an ethically sourced way with simple processing. That's the strength of our deposit. It is so simple. It's very similar to a large copper porphyry deposit. You dig the rock out, you crush it, you grind it, and you use froth flotation. These are all old tech solutions. They're simple, they're reliable. The only difference with us is we use different reagents to float the nickel rather than the reagents you would use to float copper. And because of that, we've got something that is very valuable, particularly, I'll say this, to end users in Europe. They care more in Europe than any place else in the world about the provenance of the supply chain. So if you're trying to save the world by buying an electric vehicle, well, if you're buying your batteries from China, you're not saving the world. You are mowing down tropical rainforests. You're dumping tailings into the ocean. It's hard to feel good about, about the environmental aspects of, laterite nickel mined in the Philippines. And the carbon footprint of these deposits is extremely high. Our deposit, we have a real shot, we think, of getting to a carbon neutral mine by sequestering CO2 in our tailings. And that's a whole other topic for discussion. But the simple version is we can be carbon neutral. We've got empirical data to back that assertion. And we're doing ongoing studies. We're funding studies at the University of British Columbia to continue to study this. So, at the end of the day, the strategics have to make a decision. Do they want a secure supply chain? Do they want a clean and ethical supply chain? And if they do, well, they need to talk to us.
Well, it's like Robert Friedland says, in the future, there could be a price for copper that's ethically sourced, so to speak, or, non-ethically sourced, or however you want to call that metal. So it sounds like you're positioned beautifully, and what a strong board you have. So that is all we have time for. Mark Jarvis, CEO of Gigametals, thank you for joining us in our CEO Spotlight.
Well, thanks, Adrian. Appreciate it.
It was a pleasure having you.